The three biggest wealth killers in the world are these. Number one, lack of time. Number two, investment fees. And number three, taxes. Now, I'm not going to get into every one of these today. Specifically, let's talk about investment fees. If you want to watch more about how compound interest and time play a significant role and why you need a lot of time on your side, click the video in the top right-hand corner and you will be blown away by that specific video. But back to the topic today, investment fees. And why are all the financial advisors so upset with me for just shedding light on what happens and how the industry is quite corrupt? All I'm doing is shedding light in education on the topic. I'm by no means saying every financial advisor is bad and you should never work with a financial advisor. I don't believe that you actually need one. And I think there's a lot of reasons as to my basis behind that. But number one, I think the biggest thing is education. The more education you have, which is accessible more than ever in today's world, the less you need a financial advisor. But number two, recently I shared a tweet which kind of ruffled a lot of feathers, and I had a lot of personal DMs from financial advisors coming at me for shedding light in the industry. And it was kind of mind-blowing, in fact, because I actually tweeted right after that specifically, as you can see on the screen right now, financial advisors, you should not be offended that I don't believe people need one. That's my opinion, so get over it. And then number two is I don't have a problem if someone uses a financial advisor either. Don't be insecure if you do a good job. Sincerely, me. I don't mind if people use financial advisors. Do I think they need to? Absolutely not. And so all I'm doing is shedding light on the fees of the industry and what these individuals oftentimes charge people. So let's walk through the fee model, and not only the AUM fee model I'm referring to, but other investment fees that there are out there, because there's a lot. And all my job is to do is to educate you. And if you have the proper education, you should be good to go. You get to be a grown adult and make your own decisions. So there's a number of fees, like I said. Investment fees will absolutely crush you. I'm going to do some math for you as well of how much these actually truly cost you, because I don't think you're getting the full scoop. And I'm here to save you because that's what I do. So there's a lot of fees when it comes to investing. And I want to be very clear as to which ones we're referring to each time during this conversation. But to begin with, I'm going to give you a graphic on the screen. And this graphic is going to present where these fees actually are at any given point in time. The very first fee is going to be brokerage service fee. So this is actually at the brokerage level. Think Vanguard, Fidelity, Charles Schwab. These are some really good brokers, so they're not gonna have a ton of fees, but there are fees that you should be aware of. So the very first one is at the brokerage level. Think Vanguard, Fidelity, Charles Schwab, whatever broker you're actually holding your investments with. These are covering things like maintaining your brokerage account, subscriptions for premium data, or even fees to access trading platforms or inactivity fees, for example. These are not that frequent at the big popular brokers, but at other smaller brokers or other smaller platforms, you might experience something like this. Now, if you go down a level from brokerage to account, you have what's called an individual service fee. Now, these are going to be covering features that you opt into, like taking out a 401k loan, rolling 401k investments into an IRA, seeking financial advisory services within that broker. So a lot of people always tell me that they have some advisor behind the scenes secretly within their company. Depending on that model, you might be getting charged for that. It just depends. But even those fees aren't that worrisome. They are there. They are something you should be aware of, but the biggest fee that I think you should be aware of is the expense ratio. Put simply, this is the cost of owning the fund. So when you open an investment account, you select your investments within, and you actually select investment funds or products like ETFs, index funds, mutual funds, etc. Right? And when you invest in those things, they have a cost to them. So the price of VU, the S&P 500 ETF, might cost you, let's call it $300. That is not the cost we're referring to. That's the price to actually buy the fund itself. And you can buy in fractional shares, so it's not really that relevant for the price itself. The cost behind VU is what you should be paying attention to. Now, luckily, because Vanguard is awesome and they have low-cost ETFs and index funds like VU, that's only 3 basis points. So 0.03% is what that means, 1/100th of a percentage point. And it's pretty simple when you're with Vanguard, Fidelity, or Charles Schwab. Now, the problem becomes when you're with actively managed mutual funds, which typically can charge way more than 4 basis points. Oftentimes, you might see even above 1%. Most people think 1% is nothing. Oh, I get 99%, that means. That's not the case. We're going to run through some math here shortly that is going to rock your world in a way that you've never even been rocked, because I'm going to show you the truth into the industry, and just so you can see it with your own eyes and you can make that educated decision yourself. So obviously the expense ratio is a massive fee that you need to be aware of. Some more fees that you should be aware of before we get into the mathematics and how to find these fees, where they're actually located at, is an exchange fee as well as a purchase fee. An exchange fee is a fee that some funds impose upon shareholders if they exchange or transfer to another fund within the same fund group. So be very aware of this. A purchase fee is a shareholder fee that some funds funds charged when investors buy mutual fund shares. This is not the same as, and may be in addition to, a front-end load fee, which we'll get into in just a second. I see this often when you're purchasing one group of funds on a separate platform. For example, you're purchasing VFIAX, the S&P 500 Vanguard fund, on Fidelity's platform. Every time you purchase, you get charged $75 fee. Be aware of this. That's a pretty concerning number, especially when you're buying in small increments, but this happens quite often. I see this happen every single day. Another one is a transaction fee. This is not as common in the US, but these happen also in Canada quite often. So if you're in Canada listening to this, pay attention. But a transaction fee is a fee for each time an order to buy or sell a stock or mutual fund is placed. These can range from various numbers, depends which broker you're at. And again, this is why you got to pay attention. I'm going to show you exactly where to find these fees in just a second. The next fee is a redemption fee. A redemption fee is a fee that some funds charge when investors redeem or sell mutual fund shares. The US SEC generally limits redemption fees to just a minor 2% of the sales amount. Nothing too significant here. And a more common set of fees is what you see on the screen right now: a back-end load fee and a front-end load fee. These are fees when you're either buying or selling an actual investment product. And I happen to see this a lot of times, near 5.75%, with a lot of the students that I work with in the Budgetdog Academy. We uncover this quite often. So very, very common set of fees that you're seeing so far. Now, another huge fee that's monumental for many people is what I was referring to earlier, is AUM fee, the asset under management fee. This is an important one to pay attention to. Obviously, all of these are important, but if you want to really maximize your wealth building journey, education is the key so that you can avoid this type of stuff. If your AUM fee is 1 to 1.5%, be really careful, because this is what it actually amounts to. I'm going to show you some math on the screen that might blow your mind. So I was recently talking to somebody in my DM. This is a true story. It was extremely concerning, and she did not know she was being charged this specifically. So she came to me with the assumption she's pretty good at money. She's got money down. She knows what she's talking about. And she sent me over her statements to take a second look. She obviously redacted any personal information. She said, hey, what am I being charged? The very first thing I saw were her funds that she's in, which were the expense ratios associated with it, all over 1%. The second fee I noticed was the sales load charge fee of 5% plus. So already before I even knew what was going on, I knew she was getting screwed. And then the last fee, she said she was working with a financial advisor, and that financial advisor should have her best interest because they're fiduciaries, right? So for whatever reason, this financial advisor clearly doesn't understand what fiduciary means, or it's just maybe part of the industry trick that as long as you use their suite of funds and they get you your financial goals, no matter what it costs you, might make sense to be a fiduciary. And so when she came to me, she realized they were charging her 1.5% themselves. I'm not going to call out the specific financial advising group that did do this, but if you're curious, you can always DM me and ask me that question. Let's walk through an actual example of what fees add up to be. So if you have $24,000 on an annual contribution into investment accounts, and that's $2,000 per month, let's just say you get a return of 10%. That's obviously a generalized historical look back number. However, 10% is what the market's pretty much returned since inception. By the way, your advisor won't beat this, and you'll be paying them fees. So hopefully they beat it by a little bit so that the fee makes sense, but typically they don't. So let's just say you have a 1.5% fee. This is an AUM specific fee. This is not including any other fee I noted. Just an AUM fee. You're working with an advisor that tells you how great they are and why they're the best person for you. Let's say you do this for 30 years. If you calculate this, you're going to see the final investment value of $4.3 million. Sounds pretty good. $4.3 million in 30 years, investing $2,000 per month sounds like a pretty good plan. However, if you go right down below this and you see what the fees actually cost you, which was just 1.5%, so it wasn't quite 1.5%, was it? Let's see what this actually adds up to. Over this time period, the compounded effect of the fees that you have paid into this account are a little bit over $1.1 million. Your final investment value is $3.2 million, really, and you've paid 1/4 of your portfolio into fees. This is why we talk about fees and why they're the second biggest wealth killer and why the industry hates me, because I'm telling the truth. And when you tell the truth, a lot of people come for you. They've always been paid by lying to the masses. And the more uneducated that you are, the more reliant you are on the system, which is the whole entire purpose of Budgetdog Academy. If we educate now, we fix this problem once and for all, so you aren't reliant on me even or anybody else. We educate up front, you have a lifetime group, and now we're part of something that goes against the industry, and we actually fix the problem, the core problem, which is paying a bunch of fees to do things that really aren't that complicated. And when we walk through those steps and we enlighten people, and we empower people, people start to understand what this is really about. Budgetdog Academy is not another financial services group that's just going to take your money and run with it. We're educating you in the front end to make sure that you're empowered for your whole life. You change your whole entire family tree and you understand what is actually going on. You can make your own decisions from there, and that's what we empower you to do, but we want to make sure you can do that. And a lot of people aren't even there at this point in time, which is the biggest problem behind this whole entire industry. They're saying things at a very complicated level so that you're reliant and you think the guy in the suit's really smart. That is what I'm specifically going against and what I'm attacking. And all my Henrys, my high earners not rich yet, you guys are their targets. So if you're looking for where these fees are, obviously if you're with an advisor, you just ask them straight up, hey, what am I being charged? And they have to be very brutally honest with you and tell you the truth. But all of these other fees are in the fee disclosure specifically. Let's pull up exactly where you would find one for, let's call it the expense ratio in particular, or any of the other fees I talked about that are outside of the broker or the account level, but actually within the fund itself. The fund specific ones are going to be right here. The very first thing you got to do is Google the actual fund ticker symbol and then type in prospectus after that, or a fund fact sheet. They're pretty much the same thing at the end of the day. The prospectus is the book version and the fact sheet is kind of the Spark Notes version of the actual fund itself. And if you do own any of these funds, every single year on an annual basis, they are required to send you the prospectus in mail, which we receive every single year for all of our investment products. So you can also check there, but of course I wouldn't wait till year end to figure this out. So the first thing you do is Google this. Let's call it VFIAX prospectus. It's going to pull up pretty much right at the very top of Google. It's pretty hard to miss this. Click on that and you'll pull up the actual prospectus and just do a control F, control find that is, of fees. And they're going to pop up right on your screen. As you see on the screen right now, fees and expenses for VFIAX. They have Admiral share class and investor share class. All that is essentially the share class that you're in at the particular time. At Vanguard, if you're under $10,000 within a specific fund, you're going to be opted into the investor share class. But as you can see, the fees get lower as you move up to the Admiral share class. So that's the only difference here is you're moving up a share class. With the more money you have, the less fees you're charged, which is pretty cool. And also why the rich get richer. So as you can see, the investor share class, even for VFIX, they have no fees at the very top. Sales charge, purchase fee, sales charge again, redemption fee, account service fee per year. So as you can see, this is why Vanguard's great because you're not going to get dinged with these fees unintentionally. They're a low cost provider for a good reason. And this is why they're so popular because they're great. And this is why I talk about them so much. You're probably not going to get caught red-handed like you would with another broker. And as you see below, the management fees, the 12B1 and the other expenses, which add up all to the annual operating expense or the expense ratio. There's 13 basis points for a management fee and 1 basis points for other expenses, totaling 14 basis points in investor share class. When you move to the Admiral share class, obviously those fees drop by 10 basis points. So you're down to 4 basis points, which is phenomenal. If you can stay under 20 basis points, this is just a rough rule of thumb I put together, 20 basis points with all fees included in everything we're talking about today, you're going to be in a really good position. If you're the index and you're the ETF and you understand portfolio diversification and the basics behind investing, you're going to be fine. You're going to outpace anything else that you would be overpaying for. And as long as you're following the principles we talk about here in the fundamentals, you should have no problem dominating your investments. We can go into a lot of detail about the math behind this, and I'll put in the show notes below the actual calculator I was using earlier. But here are 2 more examples as you see on the screen right now. So the very first one is, let's just assume you're investing $500 monthly for 30 years. So you have $180,000 you've contributed into this investment pot. And let's say you're receiving a 7% return. Now your total annual investment fees on the left-hand column is going to show you what fee level costs you what amount. 0 all the way up to 2%. As you can see, with 0% fees, you're going to be about $588,000 at the end of 30 years. However, as you make your way down to 1%, you're going to see there's $489,000 total, which means you've spent $100,000 in fees. And if you go to 2% in this example, you're bumped up to almost $180,000 in fees. And this is quite honestly just the truth of the industry. And all I am is shedding light right now. And then as you can see in this next example on the screen, the long-term effect of unnecessary fees in your portfolio. Let's just say you have a 7% return and one of the portfolios is a 1.3% all-in fee, so all fees included. And then the other portfolio is a 7% portfolio with a 2.5% all-in fee. The difference over just a 20-year period is $662,000. So as you saw, with all the examples we used, there are significant adjustments in numbers that we're looking at. This is not a joke, and this is the reason why I say this is the #2 biggest wealth killer. I am not saying that using a product or a service that charges a fee is a bad thing. I'm saying to be aware of them so you aren't getting screwed by the industry and you're ultra confident in what they're saying and relaying to you is in line with what you want out of your investments in particular. So I want to go back to the beginning when I talked about the industry being angry with me. I want to be very transparent about this. Again, I don't have any problem with somebody using a financial advisor, and I have no problem with you working with somebody. But as you see in the screen, the tweet that I initially shared, financial advisors, you should not be offended. I don't believe people need one. That's my opinion, and get over it. I don't have a problem if somebody uses a financial advisor either, but don't be insecure if you do a good job. So if you do a good job and you charge a price, whatever that price is, as long as you can back it and support it, that's fine. But to everybody listening that's not a financial advisor, just realize every financial advisor is going to tell you they're going to do a good job. That's like asking a barber if you need a haircut. So be very careful with that. And I will see you guys next Monday.